Hello everyone. We are going through times of extreme turbulence and uncertainty. It's become difficult to predict where the markets are headed even in the next hour. In such time, the RBI announced its first MPC for FY 25-26. MPC unanimously decided to cut rates by 25 basis points to 6% and decided to change the stance from neutral to accommodative. The rate cut decision was in line with market expectation. However, the change of stance was a positive surprise and much needed in the time of uncertainty. Inflation projection for FY26 has been lowered to 4% from 420. FY26 GDP growth has been lowered to 650 from 670. Liquidity, RBI has already taken measures to ease liquidity and there was no additional measure in the policy. Given growth inflation dynamics and projections, we expect 50 basis point additional cuts cumulative. RBI will continue to keep liquidity such that the overnight rates are closer to the SDF rates. Overall, a pro-growth and a pro-market policy. Market reaction. Given extreme volatility in the global markets, especially US rates, India bonds also responded by a spike of 2 basis points. However, the short-term rates remain flat to soft, making the curve marginally steeper. Going forward, in the near term, the 10-year bond should trade in the range of 640 to 650. However, it should trend lower in line with rate cuts and as the global uncertainty settles. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.